welcome to the Explainer. Look, if you've ever stared at a crypto chart and just felt completely lost, then you're in the right place. Today, we're going to cut through all that noise. We're going to find the signals that actually matter in a market that, let's be honest, can feel pretty overwhelming.
And this quote, wow, it just perfectly captures how a lot of investors are feeling right now, doesn't it? Especially with the way the market's been dropping. It's that shell-shocked, zombie-like feeling of just watching the numbers go down and you have no idea what to do next.
So yeah, investors turn zombies. If you felt like one of them, trust me, you are not alone. The market's been a total roller coaster. Let's dig into exactly why this recent dip has felt so darn overwhelming.
So, what's been happening? Well, it's really been a perfect storm, you know? First, Bitcoin dropped below some really key price levels, and it happened in September, which, by the way, is historically the worst month for Bitcoin. On top of all that, some important technical signals, the things traders watch to guess the next move, they just broke. Put it all together, and you've got a recipe for widespread fear and a whole lot of anxiety. Okay, so that's the scary part. But here's where things get really, really interesting. Because underneath all that fear, the market is sending out two completely opposite signals. It's like it has this split personality right now, telling two totally different stories at the exact same time. So what are these two competing stories? What's really driving the market? Well, it really boils down to this. It's a battle between short-term panic on one side and a really powerful long-term vision on the other. And honestly, understanding both of these is the absolute key to making any sense of what's happening. All right, let's get into it. Short-term fear versus long-term hope. When you put these two narratives side by side, you can really see the massive tug of war that's defining the entire market at this very moment.
Okay, let's break this down. On the one hand, you've got the bear case. That's all the fear. We're talking about massive outflows from those big investment funds, the ETFs, like over $500 million pulled out of Ethereum ETFs in just 4 days, plus all those technical breakdowns we mentioned. But then you have the bull case, and this is all about long-term hope. You've got huge institutions, pension funds, public companies all starting to buy in. There's talk of an interest rate cut, which could pour fuel on the fire. And maybe the biggest thing, there is a record-breaking $68 billion in stablecoins, basically digital cash, just sitting on the sidelines ready to jump in.
And that long-term hope? It has some serious conviction behind it. Just look at these price targets from some major analysts. They're not seeing this current dip as a disaster, not at all. To them, it's just a little speed bump on the highway to much, much higher prices. So this whole conflict, this battle between fear and hope, it brings us to what a lot of seasoned investors say is the single most important thing for success. And it's not about how much you invest, it's about how much you can handle. It has almost nothing to do with charts and everything to do with your mindset. There's this really powerful Korean concept called kuret, which translates to vessel or container. In the world of investing, this vessel isn't your bank account. It's your mental and emotional capacity. It's your ability to withstand the crazy ups and downs, to hold on through the chaos without hitting the panic button. And ultimately, the size of your vessel is what determines your success.
And to really understand why having a big vessel is so crucial, let's look at a pretty powerful example of what a long-term perspective really looks like.
Okay, check this out. We're going to compare the price of an iPhone over the years. But here's the twist. We're not going to use dollars. We're going to price it in Bitcoin. So back in 2010, if you wanted to buy the new iPhone 4, it would have cost you, get this, 2,800 Bitcoin. 2,800.
Now let's fast forward to today. That brand new iPhone, it'll cost you just 0.014 Bitcoin, a tiny fraction of one coin. And this isn't just a story about Bitcoin's price going up. It's a story about the value of traditional money going down when you measure it against something truly scarce.
So what should we watch? The whole point is to go from being a zombie investor to an informed observer, right? And the key to doing that is knowing exactly which signals to watch that will tell you whether fear or hope is winning this tug of war.
All right, here are 3 key things to watch that will help you cut through all the noise. First, the Fed's interest rate decision. A rate cut on September 20th could be a huge catalyst. Second, keep an eye on those ETF fund flows. Are the big institutions putting money back in? That tells you a lot. And third, watch for key network upgrades. Something like Ethereum's Petra upgrade in November could be a massive confidence booster.
And all of this brings us back to the final and maybe the most important question. It's not really about the market. It's about you. How big is your investment vessel? Because, understanding all the facts and figures is one thing, but having the conviction, the emotional control to actually navigate the storm, well, that all comes down to the size of your own vessel.
All right, today we're tackling a huge investment question. Do you go with the tangible security of real estate, or do you jump into the explosive potential of crypto? These are two completely different worlds, and both are vying for our attention. So just imagine for a second you have a choice. A physical property you can actually see and touch, or a digital asset that's completely rewriting the rules of finance. It's a tough call, right? And the answer is definitely not as simple as it might look. So first up, let's talk about crypto. Why is there so much buzz right now? Well, it starts with some really positive momentum. The market has been flashing some pretty strong green signals lately. And the data really speaks for itself. I mean, look at these numbers from just a single week. You've got solid gains across the board. Bitcoin and Ethereum are climbing nicely, but then look at Solana, a nearly 17% jump. That's the kind of thing that really makes investors sit up and take notice. But what are these things, really? Let's break it down with some simple analogies. Think of Bitcoin as digital gold, basically a place to store your wealth. Ethereum is more like a giant global computer where people build all sorts of apps, from decentralized finance or DeFi to digital art, NFTs. And Solana? Just picture a super fast multi-lane highway designed to make everything run way faster and cheaper. And make no mistake, this isn't some niche hobby anymore. We're talking about massive global adoption. Over 600 million people around the world now own some form of cryptocurrency, and more than 200 million of those own Bitcoin. That tells you this is becoming more and more mainstream. So, with all these people jumping in, where could this be headed? Well, some professional market analysts are throwing out some pretty bold predictions. They're forecasting a Bitcoin price that could shoot past $250,000 by the end of 2025. Now, of course, you've got to take any forecast like that with a grain of salt. And then you've got some really bullish takes. The well-known analyst Plan B is suggesting we could see a doubling pattern, hitting $160,000 in 2025 and then maybe even $320,000 in 2026. It's just one viewpoint, for sure, but it shows you the kind of optimism that's out there. Okay, so all this energy around crypto kind of forces us to step back and rethink what we consider safe versus what we consider risky. So let's bring real estate back into the conversation and see how they stack up. There's this really interesting idea gaining traction that frames Bitcoin as digital real estate. The thinking here is that it's not just a currency, but a valuable, finite piece of digital property, kind of like owning land, but in the digital world. And when you look at it that way, you start to see a very different picture of risk. With crypto, the biggest risk is pretty obvious. It's price volatility. Everyone knows it goes up and down. But with real estate, the risks are often hidden. Things like it being hard to sell, super high taxes, and all the money you have to sink into maintenance. This leads to what some people call the real estate trap. You buy a property, maybe take out a big loan. The value goes up on paper, which is great, but then you try to sell, and suddenly you're hit with high taxes or you just can't find a buyer. The result? Your valuable asset is stuck, and you can't get your cash when you need it. So after comparing all of that, what's the big takeaway? It really seems to come down to redefining your whole investment strategy and making sure you're seeing the full picture for any asset. Look, the bottom line is this. Every single investment has trade-offs. The things we think of as safe, like real estate, can have these hidden traps. And the things we see as risky, like crypto, might have some clear advantages, like being able to sell it quickly whenever you want. And so, it all comes down to this one question you have to ask yourself. Is my portfolio really ready for the future? Is it balanced enough to handle not just the obvious risks of new assets, but also the hidden risks of the old ones?
All right, let's dive into the wild world of crypto. The market is in a weird spot right now. Prices are hitting record highs, yet investors are more nervous than ever. So, what's really going on?
Bitcoin just hit a new all-time high. That sounds great, right? But the mood is really tense. Behind the big numbers, there's a much more complicated story unfolding. Let's break it down.
So our focus is on three main players that are driving this rally: Bitcoin, Ethereum, and Solana.
And the numbers are huge.
Bitcoin is hovering around $116,000, with Ethereum and Solana also right near their peaks. These are major psychological levels. The big question is, will they hold? So what's fueling this surge? Let's take a look at the drivers behind the boom.
Well, a massive factor is institutional money. Over $2 billion a week is flowing into Bitcoin ETFs. This isn't just retail hype anymore. This is Wall Street getting in on the action. Veteran trader Peter Brandt even calls the Bitcoin ETF a hot rod that has a lot more road ahead. I mean, that's how strong the sentiment is right now.
It's really a perfect storm of good news. The Fed just cut interest rates, which adds more cash to the market. Tech upgrades are making Ethereum and Solana faster, and institutional demand is soaring. BlackRock's ETF saw a $1 billion inflow alone.
This whole situation is fueling some wild long-term predictions. Analyst Plan B, for example, is forecasting Bitcoin over $250,000 in 2026. Okay, but it's not all smooth sailing. It's time for a dose of reality. There are some major risks and headwinds that we have to talk about. The market is basically a tug of war. The bull case, low interest rates and big institutional money. And the bear case, sell the news, volatility, and the constant threat of new regulations. Just look at last week. Bitcoin hit a record high, the Fed cut rates, and prices jumped. Then, just 2 days later, a sharp drop erased the gains and liquidated $153 million in long positions. That's crypto volatility in action. So the key headwinds to watch are sudden Fed policy changes and regulatory crackdowns. Plus, the tech itself has issues. Ethereum's high gas fees and Solana's network stability are real concerns that could stall this rally. So how should an investor look at all this? Let's quickly break down how you can think about these different assets. Think of it like this. Bitcoin is like digital gold, a long-term store of value. Ethereum is the tech ecosystem hub for things like DeFi, and Solana is the high-growth challenger. It's a bet on speed, which means higher potential returns, but also much higher risk. The crypto market is a powerful new landscape. The opportunity is huge, but so is the risk. The only question left is, are you ready for the ride?
All right, let's talk crypto, because right now the market is sending some seriously mixed signals. On one hand, we've got all this amazing, positive, long-term news piling up. But then you look at the prices and, well, they've been dropping. It's confusing, right? So let's try and make sense of it all. And that brings us to the big question, doesn't it? Prices are down, so why do so many experts still sound so incredibly bullish? It feels like there's this massive tug of war happening between two powerful opposing forces. So what is really going on here? I mean, just look at the last week to see what I'm talking about. Yeah, Bitcoin kind of held its ground, but some of the other big players, Ethereum and Solana, saw some pretty nasty double-digit drops. So on the surface, you'd be right to think things look shaky. But that's really only half the picture. Let's flip the script and dive into the powerful, long-term trends that are driving all this optimism. This is the bull case, the reason for all the excitement. And really, the biggest story here, the absolute game changer, is exchange-traded funds, or ETFs. This is all about big, institutional money finally pouring in. It's a fundamental shift, you know? It just makes it so much easier and safer for the big players to get into the game. And don't just take my word for it. A top analyst over at Bloomberg put it pretty bluntly. Without these ETFs, Bitcoin's price would probably be less than half of what it is today. Think about that. Less than half. The before and after picture is just stark. Before a financial giant like BlackRock even filed for its ETF, Bitcoin was hanging out around $30,000. Today, we're looking at something closer to $113,000. That's a massive shift, and it's all being driven by that institutional interest. Yeah, you heard that right. That's a 350% increase since this whole trend really kicked off. It just goes to show you the incredible power of making crypto accessible to mainstream, big money investors. Okay, so besides the ETFs, another huge part of the bull argument is Bitcoin's built-in scarcity. This is where you hear about the stock-to-flow model. See, unlike regular currencies that governments can just print more of, Bitcoin has a fixed, finite supply. That makes it a lot more like digital gold. And this model, well, it makes some pretty staggering predictions. We're talking about a projected average price of $500,000 for this cycle. And even its low-end prediction is $250,000. Wow. And the third big driver here is something called global M2. It sounds complicated, but it's really just the total amount of money floating around in the world's economy. And what's interesting is that historically, Bitcoin's price has been super sensitive to this. In fact, there's a clear pattern. When the global money supply goes up, Bitcoin's price tends to follow suit, usually with about a 2 to 3 month delay. It's a lagged effect, but it's been surprisingly consistent. Okay, so with all that good news, why the heck have prices been dropping lately? And that brings us to the other side of the story. It's time for a short-term reality check. So a huge driver of the recent volatility comes down to this one eye-watering number. We're talking about nearly $2 billion in high-risk bets, made with borrowed money, mind you, that got totally wiped out. They call this a liquidation, and what it does is trigger this forced, automated cascade of selling that can send prices just tumbling down in a matter of minutes. And it's not just those liquidations. The market is facing a bunch of other headwinds right now. You've got real fears of a U.S. government shutdown, just general economic uncertainty all around, and, well, the simple fact that September is almost always a weak month for the markets. All of that together creates this climate of caution. So this is really the core conflict, the big tug of war. On one side, you have these incredibly powerful long-term forces, like all that ETF money pushing things up. And on the other side, you have all these short-term fears pulling the market right back down. So after all that, what's the key takeaway? What should you remember? It's that we're in a market that is absolutely defined by tension right now. To put it as simply as possible, the big story in crypto today is a battle. It's the long-term vision of institutional adoption going head-to-head with the short-term fears about the global economy. So what does this all mean for you? Well, it means the foundation for crypto is getting stronger, for sure, thanks to all that big money, but you should also expect the ride to stay bumpy. This market is probably going to remain pretty choppy as it reacts to every new headline. And that leaves us with the big final question, doesn't it? As these two massive forces, the institutional bulls and the macroeconomic bears, collide, which one is ultimately going to define crypto's next chapter?